Hello and welcome to The Bottom Line on TVP World. This is where we look into some of the main business and economic stories of the day. I'm your host, Marie Cato. Last Friday, Poland's blue chip index was at its highest level ever. And only since the start of this year, it has gone up by almost 27%. Let's take a look at the feature prepared by our reporter, Konrad Korlinski.
Who's the top dog of 2025? The Warsaw Stock Exchange. It's been on a bull run since the start of the year, outperforming all major global markets in terms of returns.
We had a fantastic start to the year. Polish indices are one of the best in the world.
Warsaw's blue chip VIG20 is up over 26% since the start of the year. The index faced a brief panic after the now infamous White House meeting between Trump and Zelensky, but the trend remains clear. And it's not just the large caps that are taking advantage of this capital inflow. The broader VIG index is not far behind. It's risen by over a fifth since the start of 2025. So what's behind this push upward? Well, there are a number of factors at play, but first and foremost, we can point to the key fundamentals of the Polish economy.
We are presenting a robust growth in terms of the GDP, where, if you look at the worldwide or Europe, Europe is struggling. Yeah, so it seems that we are kind of a green island on this European ocean here.
Beyond the strong growth, we've also got the prospect of the National Bank of Poland finally introducing some monetary easing after an extended period of high interest rates. Markets are already pricing in about 100 basis points in cuts this year.
It is perceived as a bullish signal for the financial markets, for the stock markets. It means cheaper credit, it means quicker growth, and generally better economic outlook for the companies.
Another major factor boosting positive market sentiment is, of course, a possible resolution to the conflict in Ukraine.
We are exposed to distrust in Ukraine, so probably many companies here in Poland, they could be involved in this rebuilding program.
Peace in Ukraine would not only open new economic opportunities, but it would also eliminate risks that had prevented foreign investors from allocating their funds in this region.
Once a permanent ceasefire or even a permanent peace deal is reached, then quite a massive risk premium disappears.
If we look at some of the top performers on the market right now, we see that aside from the banks, which are making record profits and benefiting from increased interest from foreign investors, the firms positioned for Ukraine's reconstruction are also seeing a surge. Poland's largest construction firm Budimex is up almost 40%. Aluminum producer County Group up over 27%. And oil giant Orlen is making a huge comeback, now up over 43%. But it's not just positive news from the East driving the market. Western developments are also fueling growth.
We are leaving the 500 billion in authorized loans for such a special fund. The special fund will be available for additional infrastructure investments.
Last Friday we had this agreement in the German coalition about increasing the spending on infrastructure and also defense. Yeah, so that's also positive news for the Polish economy, because as probably you know, it's 40% of their industrial production which we export goes to Germany.
So, the question on everyone's mind is, of course, what next? Are we seeing a bubble forming here?
We are not, in terms of the fundamentals, we are not severely overbought here in Poland. So you can imagine even the higher levels, especially that for the long time we're trading on the valuations which were below the other stock exchanges.
Well, with strong fundamentals, the Warsaw Stock Exchange could push the VIG20 toward the 3,000 point mark.
So the truth is that for the last couple of years, the Warsaw Stock Exchange has not been an exciting place from an investor's point of view. But recent weeks have brought unprecedented changes. What lies around the corner, and how long might this bull run last? I'm pleased to welcome Jerzy Nikorowski, head of Brokerage House at BNP Paribas Polska, to tell us more. Hello, and thank you for joining us in the studio.
Hello, nice to be here. Thank you.
So the first most obvious question is, how long might this bull run last?
That's a really good question, because this is the expectation for good moods being prevalent on the capital markets outside of Poland and in Poland. And the answer is that we shouldn't try to project the continuation of the bull market in the definition of time, but in the definition of the components that allow on the positive performance of the stock market. And from the perspective of so-called fundamentals for the growth, we are still on the safe side of the bull market, which means the fuel is still there. There are really strong positive monetary conditions that justify the growth. Besides the expectation for this year for the National Bank of Poland to lower the rates till the consensus is today around 4.5%. For the next year, the expectation is to see the cuts for the next 1% to 3.5%. Altogether, this is a huge reduction in the burden on the financial side of the costs serving the credits for the Polish companies for the economy. So the monetary part is going to support us for at least 2 years, as I said, till the next year.
But before we get into that, I just wanted to ask you, was there anything towards the end of last year that would have suggested what we see right now? Let's just bring up a visual to see what kind of developments we've been seeing this year so far. So the huge uptake, this bull run that we've been talking about, was there anything last year?
Lots of things, actually. Our market was really a sweet spot for the emerging Europe and emerging markets for the investors because of the so-called Trump trade. The Trump trade also included the assumption that the war is going to be actually over. So in either way, or the suspension of the conflict or just the finish of the end of the conflict, it would be beneficial for the Polish economy because in particular our country was very much exposed to the negative sentiment related to the war. So speaking about this sensitivity, we see a huge beta applied on the Polish market with the news coming about either continuation of the war or reduction of the hostilities. So each time when we see the chance for the American ally to supply the weapon or to support the Ukraine in the conflict, we see the upward move on the local exchange as well. As soon as we see the Americans withdrawing on the oil base in this conflict, the Polish market was really much sensitive on the outflows of the capital. As I should also say, what we demonstrated on the graph, we do confirm, like the brokers, that these inflows, this growth of the local companies, the stock prices, they're justified by the external capital, basically.
Before we get into that, I'd like to break down the factors that are contributing to this bull run into domestic and international. So I just wanted to start with the domestic factors. We've been seeing strong economic growth in Poland, and we have more of it forecast for this year. Can you tell us about how this contributes to what we've been seeing on the stock market?
Basically, this is another dimension besides the monetary conditions, which justifies the internal fundamental, which are strong. Let's look at the previous year. We had some nice forecast of the economic growth for 2024, but at some extent it was postponed and delayed till 2025. So now we are benefiting from something that didn't happen last year. Partially the growth just was relocated to the beginning of this year. Also from the perspective of the investment cycle that is really filling up our GDP growth, this investment cycle accelerates, actually now is accelerating and supporting our economy. The unfreeze on the European cohesion funds, the boost from the German economy, what we just heard, which would be very beneficial for the Polish companies. The possibility to deduct from the budget limits the defense spending, which is really very much addressed to the exactly Polish conditions, plus the possibility on the European level to create additional fund that is going to support the investments in the defense area. Let's remember we are the frontline countries speaking about the geographic location, so it's going to benefit first of all our country when we speak about infrastructural investment on the European level. keeping this all together, let's say that in all this negative geopolitics that we are facing today, this particular situation is beneficial for the Polish economy indeed. So these other components of the growth, they're there. So we are speaking about slower development in 2024, acceleration in 2025, and from the perspective of the investments which are fueling the economy, they're not foreseen to stop this year. For sure, it's going to continue. So getting back slightly to your previous question on the timelines, so we don't expect to stop on the investment side this year.
Sure.
And there is another component. This is internal consumption, which is also accelerated. We see it on the statistics from the Central Office of the Statistics,
yes,
which is showing that the inflation, the core inflation, is going down, and the expenditures are going up.
Well, that's what I wanted to move on to, because we want to keep a balanced picture of everything, because there are some risks that are involved and have to be managed effectively. We've seen a bit of a dip in inflation, which is projected to be 4.7 in 2025. Markets expect interest rates to be cut, but we also have the issue of fiscal deficits. 5.6% at the moment. So a few factors that are a little bit negative. They're being managed at the moment.
Sure.
But in order to carry on with this success, the risks also have to be managed effectively. So can you tell us about the risks, essentially, that have to be managed in order to keep this success going?
Well, basically, the inflation which we're speaking about, it's always a volatile parameter that is going to be moved into the risk zone as soon as the prices of the commodities, as it happened at the beginning of the war 2022, they rise up. This situation which the local central bank is not controlling, so the local interest rate are not going to keep the inflation inflows through the commodities channel lower. But observing the dynamics of the core inflation, which is excluding the fuel prices, the most volatile parameters of the consumption creation index, all shows that this type of the parameter is decelerating. The spike in the inflation that we observed in the previous months is related to the regulated prices hikes, which means that they are not something that are fueling the inflation in the subsequent months, and we will see the statistical drop of the index as soon as we pass this statistical base period. Altogether, the risks are purely geopolitical, because when we speak about the condition of the economy, condition to accept the capital, and let's be honest, also positioning inside this particular situation when Polish index is very much overweight in the direction of the commodity-related companies like KGHM, PKN ORLEN, Kęty. This type of the companies, that they are just well positioned to benefit from this type of the popularity. Other type of the benchmark index of Big 20 is the financials, the big banks, which are also pro-cyclical. So they react optimistically in the positive situations. So as soon as we see the progression in the GDP growth, a Polish economy is well positioned to go with the flow, let's say. And another thing we are speaking about huge optimism, which is kind of justified, and the previous person who was commenting on the Polish stock exchange is right. In the past, the local stock exchange was priced with the discount factor due to the geopolitical risk, and this discount factor is slightly getting easier and alleviates away when the risks are getting over. So there is another level of the parameter that is supporting the growth, but as far as we go up such dynamic way as we see today, the risks of small correction, like small drops down and more volatile drops, are justified. This is profit-taking situations on the trading for many financial and individual investors. So the higher we go, the more frequent we see the small corrections. But the overall trend is going to be rather positive.
Okay, so now moving on to international factors. The prospect of the end of the war in Ukraine has been a little bit bumpy as of recent, but overall, from an investment point of view, we're heading in a direction that makes it closer than ever before. So Poland is essentially becoming more of an attractive market because of that. Would you agree?
Absolutely. Well, the easiest thing when we observe the dynamics of the particular indices on the Polish Stock Exchange is to compare the performance of week 20 versus S-week 80. S-week 80 is the place where either individuals from Poland trade or the smaller financial institutions from our country pick the smaller companies. And when this index is performing much weaker comparing to the week 20, we see that the participation of the external financial institutions on the local market is getting pace, it's speeding up. And we see it also by intraday changes on the prices on the particular companies. You mentioned Friday trading. It was amazing. PKO BP rising intraday over 5%, over 6% sometimes. Overall volume of trade on Friday session on Warsaw Stock Exchange was over 2 billion. Polish zloty, which is huge. For the whole week, last week we saw the change on the Warsaw Stock Exchange like 4.2, which is also one of the strongest historical sessions on our exchange. So we are well positioned also for the inflows of the passive capital from ETFs, from the external investors who do allocate on the Polish market through the key from key that we have in the benchmark allocation, like WIG20 and all the companies that belong to WIG20, the huge beneficiaries of these inflows.
I just want to go back to my first question, but in a slightly different context. How long can this bull run last, and how far can the indices on the Warsaw Stock Exchange go? Do you think that the VIG can actually cross 100,000 points?
Well, that is very likely. The flow, which we discussed just a second ago about this passive packages of the capital being allocated to WIG20, it's not going to continue in this speed or this dramatic rises for long. This is something that is normally taking place for weeks or a short period of time. And then when the economy justifies and it justifies, as we just said before, this continuation of the upward market, the bull market continues on the so-called fundamentals. The fundamentals later on I explained by the P&L results from the companies. Well, let's be honest also that Polish economy is very much overweight in the so-called heavy companies like extraction, processing of the materials, something that is becoming somehow sexy during the Trump times, as we can call this period after the American president, because he's against the ESG trend, and everything that is traditional, heavy, old-fashioned is getting on the popularity. And here's the Polish market, which is a perfect example of this allocation. Also, speaking about the boost in the defense expenditure on the European level, when Germany has limited range of the companies in this type of the economic activity, Poland has type of the sectors that are benefiting from the defense boost on the European level. Altogether, after the crazy time, let's say, of the bull market, when everybody is gaining, we get into something that's more rational. And this rational time of the upward market can continue longer as soon as the economic factors are justifying. As we mentioned, at least this year, at least next year, if external geopolitical factors do not kill the trend, there is a rational presumption for this trend to continue.
Okay, Jerzy, that's all we have time for. It's great to have you in the studio.
Thank you very much.
Thank you. And that's all we have time for today. Thank you very much for joining us. This was The Bottom Line. I was your host, Marie Cato. Make sure you join us every day at 5:10 on TVP World. And coming up next, we have lots of features and analysis for you. Stay with us on TVP World. Goodbye.